crashes, defective products, dangerous drugs, injuries, and abuse. Across the state of Alabama, the attorneys, proudly sponsored by the law firm of Hollis Wright, are here to serve you. Your tough legal questions answered by our experts with host David Lamb and the attorneys of Hollis Wright.
Hello and welcome into the attorneys. Thank you for joining us tonight. Got a really interesting show that is very important, very timely. You're going to want to stick around for this one. Details coming up. First, though, some ground rules. Attorneys from Hollis Wright are going to be standing by all throughout the show tonight. A neat thing that the firm makes available each and every time we are here for the attorneys. All you have to do is pick up the phone and call or text, and you can actually speak with an actual attorney from Hollis Wright who is standing by live to speak with you. Also, there are ways all throughout the program for you to join the conversation. That information is going to be scrolling at the bottom of your screen. As we say often, the show is always better the more involved you are. So please join us for the show tonight, and we'd love to hear from you. Leading our conversation, Michael Eldridge from Hollis Wright. Good to see you, sir. How are you?
Good to see you, David.
Doing very well. Good.
Nice to be here tonight. I heard that you and Josh and Carter have now gotten to 500 shows, so congratulations.
You would think we'd have it figured out by now, wouldn't you?
You would.
Yeah.
We're
still working on
me
it.
Here.
That's
so.
right. Because we got to get better,
That's
right?
right?
That's what's happening, Michael. That is it. So what are we talking about tonight?
Well, you know, and one of the greatest things about the attorneys is that as attorneys, we have all these different fields, right? And people will come up to me and say, how do I get a will? And I'll say, I don't know. That's not what I do.
Right.
This is one of those topics of conversation that I think most attorneys think you're going to have to ask someone who knows what they're talking about,
yeah.
and that is taxes.
Oh, wow.
And so we have an expert here tonight on that, Mr. Brad Howell of Meadows and Howell, to talk to us about taxes, which are complicated. They say that they are certain, right? Death and taxes, they will always be there, and things have changed with taxes in 2020 and now going into 2021 with COVID. So Brad, nice to have you here tonight, and tell us a little bit about your practice and what you guys do over at Meadows and Howell.
Yeah, definitely. It's great to be here. Our practice primarily revolves around tax debt resolution. And we have some other tangentially related practices, such as business entity formation or estate planning, but our primary practice is tax debt resolution. And what that essentially means is that if you're going through an audit, either as an individual or a business, or you already have an assessment entered, and you're either trying to challenge that assessment or you're trying to figure out what your repayment options are, whether you can settle via an offer and compromise. Those are things that we kind of help you navigate and help determine what the best route is for you to get this tax debt behind you and to maintain compliance going into the future.
Awesome. So in terms of, and I kind of got into it for a second, but in terms of how COVID has changed, I know with the dates, a lot has changed, but some other things as well. But just in terms of like filing taxes, if you're a business or an individual, have the deadlines changed in terms of filing taxes?
Sure. So they did extend the deadline for individuals. Unfortunately, if you were a business entity that was required to file by March 15th, that deadline remained the same. But subsequent to that, they did change the filing deadline so that now, essentially, they added 30 days. So that made it May 15th, although that falls on a weekend. So now you have until May 17th to file the return. The important thing there is it's not only an extension of the filing of the return, but it's also an extension of payment of taxes. The only exception there is that that is in relation to the taxes that you would have to pay with the filing of the return. If you are going to be paying estimated taxes, which you do quarterly, and the first quarterly payment would be due on April 15th, that deadline has actually not been extended. So that is one caveat to be very aware of, especially if you're a self-employed individual or otherwise do have to make that quarterly estimated tax payment.
We'll certainly make sure we're aware of that. So one of the things, and David, I'm sure you've heard people mention this, and I know it affects taxes, is the stimulus checks that have come out in the rounds of stimulus checks. And people ask all the time, you know, I got my first check, but I didn't get my second check, or I didn't get the first stimulus check. Talk to us a little bit about that.
Sure. So when the stimulus payments initially came out, they were based upon either the 2018 return or the 2019 return, whichever you had filed at that time. The purpose of that was to get these payments out as quickly as possible rather than have people wait on their 2020 information to be filed this year. So that resulted in some people not getting the stimulus payment because maybe they didn't qualify based upon their 2018 or 19 income. Maybe they were claimed as a dependent in those years, but they're not going to be claimed in 2020. So what basically happened is that these stimulus payments were an advanced tax credit for tax year 2020. So in order to claim any sort of stimulus payment that you didn't originally get, you would claim it on your 2020 return by filling out what they call the recovery rebate credit worksheet. And that's just going to calculate the ability that you have to claim those payments. If you were eligible in 2018 or 19 and suddenly you're not eligible in 2020, that means you're not going to get anything additional. That could be, a situation where maybe you had a dependent or could have claimed a dependent in 18 or 19, but suddenly that person is no longer dependent on your 2020 return. So there's a lot of different scenarios that could play out, but essentially if you are due additional stimulus payments, it would be claimed on your 2020 tax return.
We got a question here that's kind of perfectly related to this. It says, I was not eligible, excuse me, I was not eligible for the stimulus payments based on my 2018, 2019 return. Is it possible for me to claim the RRC if I am now eligible based on my 2020 return?
Yeah, definitely. And that's something that we see because you had, for example, your adjusted gross income threshold for the stimulus payments. As a single individual, if you made above $75,000, that stimulus payment started to decrease. So if suddenly your income did drop in 2020 and that would make you eligible for the stimulus payment or more of the stimulus payment, then that's something where you would be able to claim that on the 2020 return.
Okay. And one other question here. I was not able to claim my child as a dependent in 2018, 2019, but I'm able to claim them in 2020. Will I receive the RRC for my 2020 dependent if the other parent already received it for that same dependent?
Yeah, and that's a common question and issue that we're seeing from people. They think that the stimulus payments for dependents are kind of earmarked or labeled as being for a specific child. And therefore, if someone who was able to claim that child in 2018 or 2019 already got the stimulus payment for that child, then the person who would be able to claim it in 2020 is under the impression that, well, I can't get that money.
Right.
But the reality is that that person who got the stimulus payment for the dependent based upon an old return, while they're not technically eligible for that payment based upon their 2020 return, the IRS is not requiring them to repay the excess. And so the individual who can rightfully claim the dependent on the 2020 return is still able to get that recovery rebate credit, regardless of the fact that the dependent has already technically been claimed by someone else in a prior year.
Mm-hmm. Brad, let me ask you this, because anytime we get money, I think, am I getting taxed on this? Is this stimulus money something that in next year's tax return is something that's going to be taxed as income?
No, it's not, because as mentioned earlier, it's an advanced tax credit for 2020. So even though you got paid it, the amount in 2020, and it obviously added to the amount of funds you received, it's not taxable income because it's similar to the child tax credit or the earned income tax credit. It's just something that you're getting as a refundable amount that's not actually included as part of your taxable income.
Let's step aside. Time for our first break of the evening. We'll pick this conversation back up right after this quick break. As we head to break, a reminder that if you are a person who's on social media, you're certainly going to want to follow Hollis Wright on Instagram, YouTube, Facebook. Everywhere you are, they are. Just search Hollis Wright and you'll find them there. A really great resource there on social media. Stay tuned. More talk about taxes coming right up.
I'm Josh Wright with the law firm of Hollis Wright, a personal injury law firm, and thank you for watching The Attorneys. We hope you, a friend, or a loved one never needs legal counsel for a case. But if you do, the goal of the show is simple: to provide answers and legal counsel when you need it the most. Your call to the show is free and off air. So if you have questions specific to the show or related to other accident or injury topics, call, email, or text us. You can also follow us on Facebook, Twitter, Instagram, and YouTube, or go to hollis-wright.com and click on the Contact Us button. We know your time is valuable, so thank you for spending it with us and watching The Attorneys.
The Attorneys, proudly sponsored by the law firm of Hollis Wright, are here to serve you.
When we started the show 8 years ago, my hope was we would be able to do what we do best, which is to help people answer real-world legal-related issues they have in their life.
People oftentimes are confronting various legal issues and problems in their lives that range across the gamut of legal practice areas. Bankruptcy, criminal law, family law, just to name a few. And to be able to have a 30-minute platform or format to where we can just cover various legal topics once a week, that's obviously the primary focus of the show.
That we would be able to use the resources of the many lawyers we have at this law firm to create a plan that had a lasting impact that also gave back to the community at the same time. And I think we've done just that with the attorneys.
Welcome back into the attorneys. Thank you for being with us tonight, talking about taxes. Back to our conversation here in just a moment, but just a reminder, attorneys from Hollis, Wright, standing by live all throughout the program tonight. All you have to do is pick up the phone and give them a call or text them. You get in touch with them, an opportunity to speak with an actual attorney from Hollis, Wright, who's standing by live just to speak with you. Back to our conversation here about taxes. Another question we've got: if I don't get the third stimulus payment, what should I do? Can I claim it on the 2020 RRC worksheet?
Yeah, so that's something that the IRS hasn't really issued guidance on so far, because they're still in the process of sending out those third stimulus payments. So some people who have not received it yet, they may receive it coming up, and especially for those who have to, for whatever reason, have the check mailed to them. We're seeing that sometimes when maybe if you prepared your return for 2020 or 2019 with a service where you could get the refund issued to you on a specific card that they had, like a preloaded debit card. Maybe that card no longer exists. The IRS tries to use that account to send you your stimulus payment, and it gets rejected. Therefore, it has to be mailed to you. So long story short, for people who have not gotten their third stimulus payment yet, IRS's guidance is kind of just wait and see if it happens. And if it plays out the same as it did last year, which we never know, but there may not be a way for you to make a claim for a payment that you did not get, aside from waiting until your 2021 return is due next year by April 15th of 2022 and claiming that unpaid stimulus on that return. Now, hopefully that's not how it's going to pan out, because obviously that's a year away now. And so there are a lot of people that need that third stimulus now. So hopefully the IRS is going to issue some sort of portal or tool where you can make a claim for that prior to the 2021 return being due. But as of right now, that's the only guidance that we currently have on that.
Brad, tell me about, I know you mentioned the IRS hasn't spoken to this, and a lot of things are changing, a lot of moving parts. There's new legislation that I'd like you, if you can, talk about. But one of the things that I think a lot of people are probably wondering about with the stimulus is the interplay with filing and unemployment, because there's a lot of people who are out of work, and that affects your taxes, right? In terms of getting unemployment and now getting the stimulus. Speak to us a little bit on that if you can.
Sure. So there was a little bit of confusion from the IRS's end in relation to recent legislation and how it affected the taxability of unemployment compensation. Initially, the IRS released guidance on either March 12th or March 13th, stating that for unemployment compensation, you would not be taxable on the first, or not be taxed on the first $10,200 that you had earned. However, that's only available for individuals who had a modified adjusted gross income of $150,000 or less. Now, where the confusion came is that when they were calculating what your modified adjusted gross income was, they were including the excludable amount of unemployment compensation. So that $10,200 was included. So if you had someone who had wages of $145,000 and then got laid off and they received $10,000 in unemployment, that pushed them above that limit so that they could not claim the $10,200 as an exclusion. Then about 11 days later, the IRS reversed course and said, wait a minute, we actually are now reinterpreting this legislation to mean that your modified adjusted gross income does not include that excludable amount of $10,200. So long story short, for anyone who has made less than $150,000, excluding any unemployment that they received, they are able to exclude up to $10,200 from their unemployment, and that's per person. So if you have a joint return, you can exclude $20,400. And then, of course, you run into situations where on a joint return, is your modified adjusted gross income going to be more than $150,000? If so, you may want to file married filing separately. So again, there are a lot of caveats, a lot of different rules that apply to different scenarios.
Can I ask you something? Because you bring something up that I see quite a bit. I'm just curious, and you may not know this answer, which is as smart as you are. That's all good if you don't know the answer. But I see the IRS and the SBA and so many of these groups, they initially, so here's the rule, here's the plan, here's what you got to do. And then like 2 weeks later, they change it to, okay, no, you don't have to do that. What what causes those changes? Like is it public outcry or what is behind sometimes those change of courses that are pretty swift? Do you know?
I'd like to know the answer to that too.
Yeah, and a lot of this is going to be speculation on my part. I think part of it can be public outcry. You also have, within the IRS, there's the Taxpayer Advocate Service, and as the name suggests, they advocate on behalf of taxpayers and try to change or influence rules or administrative procedures so that it's more beneficial to taxpayers. So a lot of times we see situations where if they feel like the legislation, for example, it's a gray area as to how you interpret it, and they think that the IRS has interpreted it in a way that is not beneficial to taxpayers, then they may urge them to say, hey, let's take a step back, let's reevaluate this and determine if there's another way that we can interpret this. Now, in this particular scenario, I think the primary issue we have is that this is brand new legislation, and they're moving at a fast pace to try to get this recovery out there for people. And so a lot of times the manner in which it's interpreted is just done in a rushed manner, and so they may have to come back and evaluate it later. And especially as they start kind of seeing things play out on returns and how the taxability of income is either being treated on one return versus another. And so they think of all these different, again, caveats and different scenarios where maybe they need to reevaluate. So I think it's a combination of that public inquiry, internal evaluation, and just this rushed process that we've had.
Right. I know one of the changes, excuse me, I know one of the changes that I saw in the new legislation was a change or an increase in the child tax credit. How has that affected things? Have you seen any issues with that?
Yeah, so that change is actually going to be applied to tax year 2021. So as far as your 2020 return, it is not going to affect that. Essentially what they've done is they kind of bumped it up where previously, in order to claim the full amount of the credit, the dependent had to be under 17. Now dependents who are 17 or under, are able to be claimed for that credit. And additionally, they also bumped up the amounts. And especially for dependents who are under 6, there's going to be a larger amount that you can claim. So it's going to be $3,000 for dependents that are 17 or under, or $3,600 for dependents that are 6 or under. Now that is the maximum amount. Depending upon the numbers on your return, that could be adjusted, lowered, but that is and they've also done away with the $1,400 per dependent, which is the refundable amount. So now you can actually be refunded the entire amount.
Time for us. I want you to pause right there. Okay, it sounds like you got a part 2 to that. We'll pick up right there whenever we come back. But let's step aside for our final break of the evening. So if you want to join our conversation, that info at the bottom of your screen. Just one more segment for you to do so. Stay tuned. More of the attorneys coming right up.
I'm Josh Wright with the law firm of Hollis, Wright. As with any industry, it's important in the legal world to hire an attorney that is knowledgeable and has a track record of success. But with so many attorneys out there and so many different types of cases, how does someone decide the right lawyer to hire? In this week's Legal 4-in-1, we're answering the question, what should I consider in hiring an attorney? In-state versus out-of-state, big firm or little firm, recommendations from friends or family, the internet, the phone book, or TV. With so many choices and so much information, it can be an overwhelming task trying to make the right decision. To complicate things, choosing a lawyer is an important and sometimes life-affecting decision and should not be taken lightly. So how do you select an attorney? First, do your research. Look the firm up on the internet. Learn about the cases they handle and the results they get. Second, find out what clients are saying about the firm. Many websites provide client testimonials or have a star ranking system. Use those to your advantage. And finally, talk with a lawyer from their office and ask them questions. Questions about the volume of cases they handle. Do they return phone calls? Are you just a number or a client that gets the attention you deserve? Please remember, your call, email, or text to the attorneys is free. All of us at Hollis Wright want to help answer your questions on real issues you face. Remember, a competent lawyer will respond to every question you send in. That's our pledge and promise to you. Thanks for watching. The Attorneys, right here on WVTM 13.
Welcome back into the Attorneys, our final segment here. So just a few minutes remaining if you want to join our conversation or take advantage of the attorneys from Hollis, Wright, who are standing by live just to speak with you. Michael?
Yeah, so Brad, when we went to the break, you were talking about unemployment and the ever-changing IRS and new federal legislation. How has that affected, if any, at the state level, in the state of Alabama specifically?
Sure. So one thing is that the pushback of the deadline, May 17th, although that was a federal decision, many states are following it, and Alabama is one of those that by default their rule is anytime there's a federal extension, the state's going to allow it. So whereas you do have a form that you file with the IRS in order to request an extension, there's not one that exists for Alabama because you merely file for the federal extension, Alabama acknowledges it and grants it. So the same thing has essentially happened here where the deadline's now back to May 17th. We're also seeing various states are choosing to either follow or not follow the unemployment exclusion that we were discussing. However, that doesn't really apply to Alabama because Alabama is one of those states that prior to all of this did not tax your unemployment compensation anyhow. And then there's also the issue of any time your federal tax is adjusted, if you owe more or you owe less for any sort of reason, that can be claimed as a deduction on your state return, and so these federal changes can affect the bottom dollar, the bottom line on your state return as well.
You guys talked earlier about the increased child tax credit. A question we've got here is someone wanted to know, not getting that, said, why am I not getting a larger credit on my 2020 return?
Sure. So on the 2020 return, the legislation actually did not affect that for tax year 2020. So the increased child tax credit is something that's moving forward into 2021.
Okay.
One thing to keep in mind about that credit too, and the IRS has publicly said they don't know if they're going to have this up and running and be able to do it, but
that's very encouraging. Yeah.
Previously, the child tax credit was one of those where you had to wait until you file your return, it's calculated, then you get it as part of your refund. Now what they're doing, at least for 1 year, I think they're going to try this out and maybe put into permanent legislation later on, but beginning in July, what they're going to do is start paying basically pro rata your amount of the credit that you would be eligible for on your 2021 return in monthly payments. Okay. So if you're eligible for that $3,600, that would be $300 a month. So what they're going to do in July through December is pay you $3,000 a month, which is going to get you $1,800 throughout the year as an advance tax credit. Then when you file the return,
$300 a month,
yes,
not $3,000.
Sorry,
right?
Yes, $300.
A lot of folks really got excited there for a second. Yeah.
So $300 a month,
Right.
which would then be $1,800 by the end of the year. So if you're eligible for that $3,600, then when you file the return, you get the remaining $1,800. It's yet to be seen whether moving forward, if they're going to incorporate that as an advance credit that you can get throughout the year, but they're at least going to try that this year if they can get the system up and running and get those payments out starting in July.
Brad, one thing that I saw that was interesting and may affect a lot of people in the state of Alabama and throughout the country is changes with retirement withdrawals, and new laws and legislations that's come out. Can you talk a little bit about that?
Sure. So the legislation that was actually passed last year, I think March 27th of 2020, that's what kind of allowed people, but anytime between January 1st and December 31st of 2020, that if they had to withdraw from a retirement account, a qualified retirement account that would be a 401k or an IRA of some sort, up to $100,000 per person. So again, if you are a joint filer, that could be up to $200,000. But if you were a qualified individual, which basically means you were affected by COVID-19 financially in some sort of way, either your hours were reduced, you were laid off, even if you were self-employed, if you had to close your business or reduce your hours, you can withdraw up to $100,000. If it's taxable, that $100,000 is still going to be taxable, but what they're allowing you to do is to spread that taxation over 3 years. So you would essentially have 1/3 each year that's added to your taxable income. But then if you repay any amount of that back into your retirement account within that 3-year period, you're going to get a credit for those taxes you paid on it. So it's just kind of giving them a little bit of leeway to use their retirement account.
And what's the process, if any, to show that you're qualified to be one of these people that takes this money out? Is it just that you've got a 401k, or do you have to be able to go through some process to show the IRS that you qualify?
It'll be similar to a lot of other things you claim on your return. So for example, if you itemize expenses and you're claiming charitable donations, you're not required to submit a receipt with your return to prove it. Now, if the IRS ever comes in and audits you, you're going to have to submit receipts. Same thing here with this retirement withdrawal. You're going to claim it on the return through the worksheet or schedule that they have for that. It's going to spread out that tax liability over 3 years, and then if you make repayments, you're going to report those on the return as well. But if your return ever gets audited, probably the big question then that people are going to be facing and what they're going to have to document is, were you diagnosed with COVID? Was your spouse or dependent diagnosed with COVID? Was your business one of those that's affected by the government mandates of certain shutdowns or certain restrictions of hours? So if an individual claims it on their return but they weren't eligible, that could come back, and affect them during an audit.
That's good to know, David. I was about to go take some money out. Get a new truck.
Yeah, you better be smart and wise about it. Hey, we are just about out of time, but just enough time for a final thought from the both of you. And Brad, if you would, you go first, please, sir.
I would say final thoughts. One that we always have in relation to taxes is try to stay ahead of things. And obviously with all these changes in tax laws, that's difficult to do.
It is tough.
That means, though, that you need experienced, credentialed, responsible professionals who can hold your hand and walk you through this. Even during normal tax years, we have tax laws that change. We just have a complex tax code that does not have a flat tax. It has all of these different deductions and credits that may or may not apply in various situations. So try to stay ahead of things. Don't bury your head in the sand. If you know you're going to owe taxes, go ahead and file the return. Because guess what? There's late filing penalties and there's late payment penalties. And the more you delay on filing that money is just going to continue to accumulate and grow. So get someone involved who can help you out and just stay ahead of it all.
Well, Brad, thank you for being here. It's one of those topics that's even highly, highly affluent people struggle with. So getting these answers to these questions has helped me, and I think it's helped our viewers.
I think so too, and I joke with Brad because he's been on about as many times as I have been on the attorneys. But he's kind of like the groundhog. Brad comes out once a year, and every time he comes out, we're going to have to pay taxes, is what we know. But
the tax
yeah, it is definitely, especially now, there are some complexities to it that it pays to have somebody like Brad. He's our go-to guy on taxes, and be wise to do that as well. So, Brad, good to see you once again. We'll see you next year.
Definitely. Good to see you guys too.
All right, Michael, thanks so much. Appreciate it as always. Hope this was educational, informational for you and helpful. We're going to wrap things up here, but we will be here next week, and we look forward to seeing you once again next time on The Attorneys. Have a great week, everybody.
Thanks for watching The Attorneys, sponsored by Hollis Wright.